your numbers beat. We'll get to that in just a moment, but I first do want to concentrate on the Russia business. What does your timeline look like for exiting some of your business in Russia, and do you expect the majority to be gone there, let's say, within the next year?
Yeah, well, in fact, good morning, by the way. So, yes, that is an ongoing story. So we've already pulled out some of the industrial businesses. By the way, the sanctions also push us for the right reasons in that direction. And in fact, the last wave of sanctions will bring us very quickly to localize that business. Now, that's particularly vulnerable. We had about 2% of our turnover in Russia. But in fact, it is very much dependent on raw materials that come in, mostly from the EU, by the way. So it becomes a very difficult situation to maintain any business, whether you would want it or not want it. So yes, we've announced that the business we suspected that will be dropping by about 70% in 2022 versus what it was in 2021. And I would suspect that the residual business will be probably more the decorative, the architectural paints business that in fact stays. The industrial coatings businesses disappeared through a variety of sanctions, etc. Now, that is of course sad because we felt we had quite a nice business there. But that we can offset because we have a backlog in other parts of the world anyway where we don't have enough raw materials. But to be very honest, that dwarfs the suffering and the tragedy in the Ukraine, which is in fact top of mind for us here.
Good morning, Thierry. And as you say, the human tragedy is top of mind for everyone. This has been a big blow on the revenue side. I'm curious about, you mentioned raw materials, trying to access them around the world there. I'm curious about your outlook on supply chains. Do you think for the rest of 2022, your supply chain outlook is going to get worse, or do you think it's going to improve at some point? And why is that view? What's that view based on?
Yeah, so a nuanced answer there. First of all, we're extremely proud that our pricing has actually caught up with the raw material inflation, including freight inflation. So that has been a big mountain to climb over 2021. So we're happy that we actually reached that spot. We do expect raw materials still to increase during the second quarter, but we will be holding pace with that, which, again, we're very proud of that achievement. And definitely our commercial teams have done a fantastic job keeping that pace. We do see some early signs in some of the bigger raw materials of easing, and we do expect that in the second half of 2022 we will get, anybody's guess what the speed is going to be, but we will get to something that is more normalizing as raw material becomes more available. To be honest, right now it's less maybe availability of raw material, but the shipping and the logistics is probably the biggest constraint, specifically in North America.
Right.
Getting it across the country is a real issue.
Well, to that point, there has been expectations that raw material and energy inflation, it's not going away anytime soon. And this is something that HSBC analyst Martin Evans has noted about your company, Thierry, that you've raised prices, but they don't accurately reflect the fact that we're going to see raw material prices continue to be high past the first quarter. What would you say to that?
I would say that that is the wrong analysis, unfortunately, because first of all, we have caught up with the raw material inflation and the freight inflation. So we've done that, and yes, there may still be further inflation, but we will definitely keep pace with that. What should not be forgotten, however, is that the big run-up, the 35 to 40% run-up in raw material costs since the beginning of 2021 is largely driven by the non-availability. And yes, of course, if energy costs go all over the place, that will have an impact. But you have a big impact from the non-availability, the scarcity of the raw material with force majeures and everything that we had. And then you have an impact that comes to energy. And as the availability becomes bigger, the net will be a reduction in raw material costs. And in fact, in some of, again, as I said, in some of the bigger categories, you see that. The economic activity is also somewhat less than was expected. And for some of the commodities that we buy, the bigger raw material suppliers see that coming and in fact start talking about other ways, other deals, in fact, for us to source that material. So you have to look at the scarcity pricing and then the input cost, where that analyst would be right. But that first part is overwhelmingly the factor in our business right now. So there we do believe that it will result in an easing of raw material costs during the second half of 2022.
Okay, so pricing's already caught up with the change in raw materials or input price inflation. How are you seeing that impact customer demand, that you're having to raise prices, you're having to pass through those costs?
We actually demand in almost all our segments, in almost all our regions, has been very strong. If we analyze the dynamics, it's mostly impacted by resurgence of COVID in China. The beginning of the quarter, there was Omicron in Southeast Asia, all the logistics issues that I just described. But the underlying demand is pretty strong. Again, our backlog, orders at hand that we cannot supply, is about 120 million. That's about 4%, I would say, volume that we could not ship because we simply didn't have the material. So we haven't seen any let-up in demand. And in fact, as the quarter developed, we saw in places like Latin America, we saw in Southeast Asia, we saw quite strengthening demand. And Europe, in fact, has been in demand steady in all of our segments. The much discussed do-it-yourself segment we have in Europe that was somewhat benefiting from people in COVID sitting at home and doing home renovation. That has normalized now for about a year, and it's consistently floating at about 4 or 5% higher than it was in 2019. And that has been very consistent through all of the countries. So it's a pretty steady demand and strong demand there.